Hello traders and investors, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets from a neoclassical perspective, asking ourselves what happened today and what do the charts tell us. You know, when I say that, I think it gets lost a lot of the times. We're tape readers. We have developed a model, or at least I did, 10 years ago, a decade ago. I've been following it ever since, folks. I've been long this market almost the entire ride on the way up. Despite all of the mayhem that took place in 2008 and 9, I was short in 2008. I actually ended up making money in 2008 when the market crashed. When the market goes straight up, it's hard to outrun the market. I mean, that's a fact of life because you're not 100% invested most of the time, so you have to make it up elsewhere, and you got to be able to stay with it most of the time. It pays to be safe, prudent at times, but most of the time you just want to ride the market, and right now we're still riding this thing. Last night I gave you some numbers, I gave you some ideas about where this market was going to trade and how it was going to trade. I talked about the NDX, I talked about a test. That test I talked about was on target again. I do this day in and day out. I know that some of you appreciate it and you see what I'm doing, but I told you this area right here was probably going to be the buy today. That's probably where you want to load up, whatever trades you're going to make. And I also told you it didn't have to be in these stocks. But when you got down in this area, if they couldn't break it down, folks, they're going to turn around and take it right back up, and that's what they did, volume trailing off. This looks like a good reversal to me. This looks like you have the potential to at least come back up here and test into this and try to make a push back to the top side. Now, what we have going here on the NDX, and this has been the weakest group because big cap tech has had its run, is you got this bearish retest regenerate. You got into it, you got pushed back down. Now you got the reversal again. They came back in. What they're going to try to do at this point is they're going to try to take it to the top of that and try to get over it. Now, a lot of that is going to depend on what happens with the S&P 500, and that is the S&P is going to try to break out of the range, and that also is going to be hard to accomplish. And so I'm looking here at the S&P and I map this out, right? That's your range. And so I would expect what's going to happen is you're going to see them go after the top and try to break it out. And maybe they get a nominal new high up here, and if they do, that will allow that NDX to pull up to that bearish retest regenerate top, right? And then that's where these fold back over again probably. Because the way things are set up, I wouldn't get too excited if this one breaks out and makes a nominal new high. That's not where you don't want to buy a breakout here. You want to buy the range. That means you buy into the bottoms and you sell out at the tops or right above the tops. It's a one-way street. You want to be long. That hasn't changed, right? But you don't want to be buying breakouts right now for the most part. You want to be focused on range trades. That's where the money's going to be. And it's going to be away from tech. Yeah, you can make money in tech because tech moves around a lot, but that's not where the big moves are. You had a bearish engulfing here, it looks like, and I didn't realize this, but you had a bearish engulfing today on the Russell. That's actually a pretty good negative. Let's see if it held this low. 1409. It did not, and that's a negative. There's no other way to read this. That's a negative. So we have good trades going on elsewhere. I like the way the NDX, the NASDAQ, probably the NASDAQ broad market. I'm suspecting it looks the same as the NDX. Let's look at it, and it does. So I think all of this looks fine. You just had bad action in the Russell again. I'm assuming that's because of the oil markets and the banks. Let's pop over to the sectors and see what they look like right quick and see if that's true. So the first thing I'm going to do is I'm going to pop down to financials. I want to see what they look like. And then I'm going to go to the secondary sectors and see what those guys look like. So the financials got to the top, couldn't hold. That's not bad, but I mean it's not great. Let's see what the I want to look at like KBE, KRE. Let's see what those look like right quick. Also, they did the same thing. And so the weakness in this really came in at the end of the day. They closed on the lows. So this is interesting. So what you had here was you were attacking this high again, right? Trying to get over that high and unable to get over it and stay over it. Volumes not there comparatively. It looks that's 4 test failures, or actually 3 test failures. I can't, I don't want to put lipstick on a pig. That's ugly. This thing can trade back down into this area. KRE, I assume KBE is going to look, or that is KBE. Let's look at the KRE. Let's see what that one looks like. Yeah, same sort of thing. So again, same sort of thing, test failures, can trade back down into this little area. So this is not the end of the world, because when I look at this, you got good support here, right? You got that same sort of good support. In other words, if you pop down into here, they're probably going to buy it. And so I guess I'm not terribly dissuaded by what I see here, although that is a negative. But if you stop and think about it, what that tells you is what we've been talking about, and that is it's a range trade now. I mean, it is a range trade. I was been on a range trade for a long time. The S&P broke out and legged higher. I pretty much gave up on the range trade, and here we are in the range trade again, right? It just doesn't go away. You got volume coming in the IBB. Don't know what's happening there. It did hammer reversal, but it left volume at the bottom, so that means it can go down there and do it again. So nothing that positive there. I'm going to flip through these real quick, see what they look like. Home builders, they get their breakout again. So this was good, because if you remember, back here we were talking about a bearish engulfing. We should pull back. We did. Then we got this bar, and I said, okay, they are going to pull it back again. They did, but they can't break it down. And what do? They eventually break it back out. Volume comes back in. That looks bullish again, and you still got it bullish out here. This has been one of the best major sector groups all year long. Let's see what the transports look like. So the transports still struggling, but they're at the high still. Let's see them on the weekly. Yeah, they're still trying to make it back up to this high, 17116. SOX. Now this was the one that really got hit on the NDX along with the big cap technology, and it also held where it had to. So that one actually looks okay for a bounce. Basic materials trying to break out, couldn't do it. They got almost a bearish engulfing yesterday. They break right back down. Okay, so I've been talking about range trades. You want to buy retraces. This is a retrace. It's not the best because it's a second. In other words, you retraced already once here, got the regenerate. Now here's your retrace again. As you retrace back in, your probabilities go down. And so that's not great, but it's okay. It looks like it's going to try and pop a little bit higher. Energy market. This one, I wouldn't mess with the energy market. I know, it's like a mermaid singing her song, just keeps sucking you in, but that doesn't look good. Bullish outside day on the XLI. That looks to go higher. This is a place to play. Let's look at the technology. Now, I did notice big cap technology struggling again today, but they did get it together. I saw Google, Amazon, Apple, Microsoft, all of them, they traded down, but by the time of the day was ended, they were trading back up. Durables been strong, and durables hold all right as well. Let's look at the utilities. We had some rotation going on here again today. People don't want to leave this market. Plain and simple, they don't want to leave this market. XLV came back, also looked fine. I like that chart. And here's the XLY. I can't break it down yet, folks. This market is going to bounce tomorrow. It's Friday. You got ex-dividend stuff on the SPY, probably on some of the others as well. The setups here. You got the negative on the Russell, but the Russell's probably going to get pulled back up along with everything else. You're going to get a bounce tomorrow, and then we'll have to take it next week. Talking about next week, I'll probably be back on time next week, and I'll be with you then on Monday. Have a great one. Thanks for joining me. Take a look at the comments. People really starting to find this program useful. You ought to look at the books. You ought to think about joining the site. It would really benefit you greatly, folks. The mentoring program is excellent. We've got a number of mentors now. We're honing in on how to use those mentors full effect to benefit the membership group. Check it out. Take care. Good night.